Welcome back to our financial literacy series. Today we're tackling a topic that confuses even the most seasoned travelers: rental car insurance in the United States. Standing at that rental counter can feel like a high-pressure sales pitch, leaving you wondering if you're actually protected or just being upsold. In this 10-minute masterclass, we are going to break it all down step by step. We'll look at what you're buying at the desk, how your own car insurance works, and how to use your credit cards to save hundreds of dollars. Before we dive into step 1, please take a moment to subscribe to our channel. Your support helps us create more of these in-depth guides to save you money. Let's get into it. Why does this matter so much? The rental car market is massive, and as we head through 2026, the cost of vehicle repairs has reached an all-time high. A simple bumper scrape that used to cost $500 can now cost over $1,500 due to advanced sensors and cameras. If you drive off that lot without the right coverage, you are personally liable for the full value of a $40,000 vehicle. Most travelers either pay an extra $40 a day for coverage they already have, or worse, they decline everything and leave themselves exposed to financial ruin. Today, we're going to ensure you're in the smart group that gets full protection at the lowest possible cost. Step 1. Decoding the rental counter waivers. The most common offer is the Collision Damage Waiver, or CDW, sometimes called a loss damage waiver. It's important to understand that this technically isn't insurance. It's a legal agreement where the rental company agrees to waive its right to collect from you if the car is damaged or stolen. It's the most expensive option at $10 to $30 a day, but it has a secret benefit: loss of use. Most personal insurance policies will cover the repair of the car, but they won't pay the rental company for the money they lose while the car is sitting in the shop. The CDW covers that revenue gap, which can sometimes be more expensive than the repair itself. Next up at the counter are the 3-letter coverages. Supplemental liability insurance, or SLI, is perhaps the most important. While rental companies provide state-mandated minimum liability, those limits are often terrifyingly low, sometimes as low as $10,000. If you're at fault in a major accident, that won't even cover the ambulance ride for the other party. SLI typically boosts your protection to $1 million. Then there's personal accident insurance for your medical bills and personal effects coverage for your luggage. While these sound good, as we'll see in the next step, you might already be paying for these twice through your other insurance policies. Step 2. Evaluating your personal auto insurance. If you own a car in the US and carry full coverage, meaning both comprehensive and collision, your policy almost always follows you to a rental car. Your liability limits also apply. This is where most people waste money. If you have a $1 million liability limit on your personal car, you probably don't need to buy the SLI at the counter. However, there are 2 major things to check. First, your personal deductible applies. If you have a $500 deductible, you're on the hook for that first $500 in a rental accident. Second, a claim on a rental car will go on your personal driving record, which could cause your rates to spike for the next 3 to 5 years. Before you skip the counter insurance, you must check for the valuation gap. If your personal policy is based on your older sedan, but you rent a brand new luxury Cadillac, your insurance might only pay out up to the value of your sedan. If you total that Cadillac, you could owe the rental company $20,000 just for the difference in value. Also, be very careful if you are traveling for business. Most personal auto policies explicitly exclude any accidents that happen while driving for commercial purposes. If you're on a work trip, verify your company's coverage or buy the desk insurance to stay safe. Step 3. Leveraging your credit card benefits. This is the ultimate traveler's hack. Many people don't realize their credit card includes a rental car benefit, but the key is knowing if it's primary or secondary. Primary coverage, found on cards like the Chase Sapphire Reserve or Capital One Venture X, is the holy grail. If the car is damaged, the credit card company pays the bill directly. You don't have to file a claim with your personal insurance, which means your premiums stay exactly where they are. To use this, you must pay for the entire rental with that specific card, and you must formally decline the rental company's CDW at the counter. If you accept even a portion of their coverage, your credit card benefit is voided. Most mid-tier cards offer secondary coverage. This is still helpful, but it means you must file a claim with your personal insurance first. The credit card then steps in to pay for your deductible and any fees like loss of use that your insurance didn't cover. However, credit cards almost never provide liability insurance. If you don't have a personal auto policy, you are legally required to have liability, which means you have to buy it at the rental desk. Also, check for exclusions. Most cards won't cover Teslas, high-end sports cars, or moving trucks. If you're renting something unique, call the number on the back of your card to confirm you're covered before you sign the contract. Step 4. Your final decision matrix. How do you choose? Here is the simple rule of thumb. If you have a credit card with primary coverage, use it and decline the desk's CDW. This gives you the best protection with the least risk to your personal rates. If you have a personal policy but no primary credit card, rely on your policy for liability but consider the desk's CDW if you're worried about loss of use fees or a premium hike. If you don't have personal insurance at all, you must buy liability and CDW at the counter. There is simply no other safe way to drive. Take a screenshot of the table on your screen right now to keep as a reference for your next trip. To wrap up our masterclass, remember these 4 things. First, know that CDW isn't insurance, but it covers loss of use. Second, your personal full coverage policy usually follows you, but your deductible still applies. Third, primary credit card coverage is the best way to protect your personal rates. And fourth, always verify your coverage for luxury vehicles or business trips. By taking 10 minutes to understand these steps today, you could save thousands of dollars in the future. Rental car companies count on your confusion to sell you expensive waivers. Now, you have the knowledge to drive off the lot with confidence. Thank you for staying with us until the end of this deep dive. If this guide helped clarify the confusing world of rental car insurance, please support our channel by hitting the like button and sharing this with a friend who has a trip coming up. We'd love to hear from you. Comment below if you've ever had to file a rental car claim and what your experience was like. And of course, don't forget to subscribe for more expert advice on navigating the US financial and travel landscape. Safe travels, enjoy the road, and we will see you in the next video.